EOS fell into our black hole and seemingly has survived to tell the tale. This is the only coin that I'm following that actually broke its support overall. Yet I don't think there's too much reason to be bearish or too sad just yet. We're going to touch on that later on in this video, but this is the 1 hour chart. All of the cryptocurrencies hit their bottoms around May 12th, 2 in the morning. So in the early morning hours, if you were planning to buy the dip, that was a good time to do it. I didn't quite catch the perfect bottom, but it's better to be good sometimes than try to be perfect. We had a setup for downside in our last update. We had a 1-2 setup in place for the downside, and I believe we had finished the third wave down as of our last update. We were working on a fourth wave bounce, and lo and behold, our fifth wave bottom, what we're calling the bottom, actually hit the 1.764 extension. Your fifth wave standard targets are the 1.764 and the 2.0 targets. It hit the 1.764 perfectly. So children, when we talk about Fibonacci extensions, this is why they're important. The bottom target was, again, $104 to $105. We hit it right on the freaking dot, so you can't beat that. Now, ever since then, the structure has been questionable. So we had our, again, very quick spike down as we were expecting. This coincided with quite a stock market bottom, although the stock market actually bottomed the next day. Sometimes these things catch up over the in the overnight hours. We have what could be considered 5 waves up. This is a common pattern across the altcoins, although Bitcoin Cash has actually hit a higher high since. So maybe it's an indication of things to come, much cleaner pattern. Might as well show that here. We actually had a kind of a blow off earlier today. So this is a very bullish look amongst the altcoins. Hopefully that is an indication of things to come. However, we are not out of the woods. We could just as easily count this as a 3-wave pattern up, a 3-wave corrective pattern up in red, as we're seeing. I don't know where my fib extension tool went. I'm going to put that on there. So assuming that this is actually 5 up as shown in blue, we have got, again, a larger first wave, a second wave, and possibly the makings of a smaller nested first wave. We need to see this thing blast through our pivot zone about 149 to 155 and stay above 149. If that happens, it's a very good indication that we have more of a bullish impulse developing. Otherwise, this red pattern could take precedent. We could easily count this as an impulse down for a first wave with a second wave bounce, and we may have already started a descent. If that is the case, our Fibonacci extensions are projecting down to as low as $1, maybe 95 cents. That would be the low. So it's possible that should coincide, if I'm not misremembering, with what we're seeing. So our 2.0 would be the other standard extension. I don't think we're going to go all the way down to the 80-cent mark. So don't be surprised, again, if we get down to as low as, what did I say, 95 cents based on the calculations you're seeing on the screen at the moment. And, well, if it happens, it should be relatively swift. We're not seeing too much downside action just yet. Now, shifting to the big picture chart, what you guys have probably been waiting for, what does it mean that we broke our major support? Well, a black hole that I named it, it's not really nothing to do with the actual cryptocurrency itself, was set at 128. That is the major support based on the bottom we hit on March of 2020. I was I was hoping it wouldn't break that. And fortunately, this is the only coin I follow that broke the support. Dash came much closer than comfortable, although it's in a bounce right now. I don't think we're going to go down, break it there, but EOS did, which tells us that this is probably following a different pattern from the rest of the cryptoverse. This is basically, it's still counting as our major first wave. So this is the rally blow off back in April of 2018. And since we hit a new low, this best counts as just a really long winding second wave correction. No guarantee right now because we don't have as much history in EOS. We don't know what the sentiment would have looked like before this point. And we need to see more of an upside structure before we're done. So I've relabeled this. So you got your first wave here. This whole descent is counting as an A wave with the blow off rally in the spring of 2021 as a B wave. Now, whether the A wave bottom is here or it's actually here, it's hard to say because this could be a expanded flat B wave and a C wave blow off for bigger B wave. Regardless, this crash ever since May of 2021 counts best as, again, an impulsive C wave, although it could also count as maybe a zigzag as well. I don't love it. And therefore, what comes after second wave is a third wave. And even if it is a corrective bounce up, we should see quite some momentum upwards because, again, none of the other coins have broken their supports. So we might see crypto sentiment still take us into this box. Now, how do I calculate this box? It's just a standard Fibonacci extension based on the larger first wave. So we have a first wave and a second wave that came many years later. So based on that, this blue box is where the 0.32, the 0.618 extensions are. There is often also symmetry in how we rally. So while in the other coins, I am looking for a first wave bounce that would take us back to about where we were end of March into early April. We could see that in EOS. We're looking for a larger first wave to take us somewhere in there. So I'm actually going to draw this thing out here just to give you an idea of what I may be expecting. And again, if we go a little bit lower, margin lower, it doesn't really change the chart much. This red wave 2, whatever, this is still the bottom. It's not going to make much difference in the calculation. Expect a first wave to get us about where we were end of March. Not sure how deep the second wave will go. Looking for some symmetry. And maybe we have a third wave that looks something like this, goes up there, and then that would complete our first wave. Whoops. I just messed that up real good right there. So that would be the top of first wave. Something like that is a possibility. And this is, again, based on the symmetry that we had on the descent. We often see the same kind of thing. We're not going to have a more precise set of targets until we have some more upside action. We want to see that impulse. So if this does take a more bullish turn, again, I already mentioned I want to see us break the 149 to 155 zone. If we are really in a third wave, that should take us up to $1.80 to $1.90 relatively quickly. This shouldn't take that long at all, with an ultimate fifth wave top around just around the $2 mark. So on the big picture chart, $2 would get us up to about right here. So not quite all the way to the top of this box, but you don't know exactly how this thing's going to rally. We could see some outsized rallying if the sentiment does shift that much. So right now, as I said, not much more precision we can get than that. There's, again, limited history in EOS, and the coins do follow each other. There is sentiment shared, so we may be able to make some inferences based on what we see in the other altcoins, as well as Bitcoin and Ethereum, none of which are showing any kind of, well, nothing particularly concerning. Maybe that nominally lower low, but that's about where we are. The risk right now is actually lower because we are so low if you're trying to buy. As I mentioned, I did buy the dip. I sold half my coin holdings about 2.5 weeks before a crash. I did buy back in. I did the buys just before and just after the low. So I didn't catch it perfectly, but I caught it. And if you're looking to buy, you could start dollar cost averaging if you're a little bit more risk averse. Otherwise, if you want to put more of a lump sum in, bigger wad of cash, you could wait for this larger impulsive wave to develop. So once we're around $2, we should see a pullback for a small second wave. That would be a pretty safe time to buy. It would give you a bit more confidence and a bit more confirmation that the bottom has come and gone, especially if you see the stock market also turn around and start rallying. Again, these two have been very closely tied in sentiment, as have the commodities markets. So I'm going to have plenty more updates coming your way. Subscribe so that you don't miss any updates. And until next time, thank you for watching and happy trading.